Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by the lab today. Interesting day yesterday. Yesterday, of course, a nice day in the Trader Lab, and those of you who follow the stream have made that stream public. And if you have interest in what we did yesterday in the Trader Lab, it will be available and it will be up there on the bookmap.com website, or you can just plug in YouTube, Tom B. Bookmap, and it'll take you over to them. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. The Trader Lab is a community of like-minded traders that have come together to leverage their collective experience. This stream is about using a high-tier order flow tool to integrate with auction behavior or market mechanics using defined or structured trades that are available to everyone in the Bookmap Discord Trader Lab chat, as long as a library of webinars to help you see a process that you might get some benefit from. The business of trading is really different than what most of us think it is. It is very much a statistical business and not a predictive one. Can I please get a screen check and audio? All right, thanks, Marty. Glad to hear that you guys can hear me in Discord. Thank you. All right, everybody, let's get going here. We have some interesting structured trades that are taking place. In fact, one of them just hit another target, which I'll get into. It's actually setting up something called IBF and a neutral day. So let's take a look at first of all, the condition of the market. We had a big up day yesterday, and we had a positive report this morning, which is supportive of a continuation of the quote bull market and the uptrend. Now, there's a couple of things we need to consider as traders, and that is the market goes up to go down, and the market goes down to go up. And what that really is all about is that there's always two sides of the market, of course, but what do those sides represent? They can represent, of course, initiative buyers, and also those initiative buyers might have stops beneath them. So I do need to take care of something first here before I continue, which I neglected. So let me take care of business, as they say. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, got that. So when the market goes up, the market goes up to go down, and the market goes down to go up. And what that's really about is that the rotational aspect of the market, and all fractals or all time frames, you always have stops on the other side. So the weak side, and which is typically us, retail traders, if the market's been going up, there's going to be sell stops trailing an up move. And yesterday was a pretty explosive move. And as you guys know, if you watch the stream, we participated in this. I think I mentioned at the top of the stream that this stream is now available to everyone, and it's the title of it. You'll see it. It's live stream order flow, volume profile, and order flow. I think it says trading plan and trading the plan, something like that. But anyway, it's available. It's published, and I invite you all to look at yesterday's stream. Now, this is the follow-up to yesterday. What happens after market goes up like that? Well, often what we'll see is something called responsive selling. Responsive selling are the longs that are in the market plus the sell stops under the market, which can be cut. That can ignite the seller. So when the market rotates, you're going to get, of course, potentially some profit taking, longs are in the market, and that profit taking can then trigger stops, which creates more selling. Stops become market orders. So it kind of feeds on itself. Now, as this process takes place, and nobody really knows, that is at the top of the move, or is it just the profit taking? And then we might, subject to our plans, either participate in this profit taking and take shorts, or we can wait and then wait for the exhaustion, if it is only profit taking, to reestablish long positions in the direction of the trend, which is up. So a couple things. Possibility to get short, possibility to get long. The question becomes where to get short, where to get long. And that is the Trader Lab is based on, is what's called structured trading and attempting to get in alignment. Now, the word attempt is very important because nobody picks the high or the low of anything. It's always clear in hindsight. So what we're going to look at today is a couple of things. First of all, we are opening basically in a small gap above yesterday's high, which is right under here at the time and settlement. Also, the ETH volume point of control is the highest volume from the ETH session. And that's kind of like a retail price. So they're like saying, to me, the market's language, when I say they are saying, I'm really referring to participant behavior. I don't use indicators, so my indication of behavior is what the participants do. And when you guys look at indicators, you're kind of doing a similar process, except you're looking at an output of price. You're not looking at the interaction between the participants, you're looking at the result. And the differentiation is that when I see the participants' behavior, I might be able to glean something, a truer indication of participant behavior than an output to a lagging indicator that is not aware, if you will, of context. Context is the market's gone up, there's sell stop under the market. If I get indications from the participants of this responsive selling, I may want to get short. My indicator does not differentiate, and my indicator would not tell me to get long down at the bottom somewhere, wherever it is, because it's not based on structured trades. It's just an indicator. Of course, this is subject to how you slice and dice and define the market. So this is a way to define the market, and it's without indicators. It's based on participant behavior. So let's go take a look. So ETH volume, high volume. Yesterday's RTH retail. So high volume based on the auction or market profilage, if you will, is what is retail. And if we leave a price behind, it is like saying, well, you can't buy it here anymore. The ETH low was here. So what this sets up initially coming in is I'm looking for long continuation trades. But I have to be aware that the market is already long. So when I lay out a trade plan for the day, I actually have, well, if it opens, it can go up, of course, and we get continuation. Or the longs are already in and we get some late buying. And if now we run out of buyers, all these buyers, the new ones today, and the longs that are already in here might become sellers, profit taking. And then whatever happens from there is trade management and wear a helmet. So let's go take a look. So this is the RTH open somewhere. I think it's covered up. There it is, RTH open. And we're looking for the ETH high initially. So for me, the first trade I was looking for was potential to come up. And this was very important right here because these levels here were important. So this is potential, maybe resistance, maybe there, or maybe down here. So I'm opening kind of in the middle. So I'm looking to see who takes control. So let's go take a look. This is called the developing volume point of control. I open, I see buyers taking the other side here. This is delta. So what I'm seeing here is right here, I'm seeing what looks like a buyer, obviously a buyer. But the point is the market is going down and I'm seeing buyers So I'm seeing absorption here. So right here, I'm looking at this and I'm thinking, well, this looks like it's going to be a long. So this is my micro high volume structure. I'm going to put a little line on it. So I'm looking at this as buyer, seller, sellers, buyer, seller. So here was absorption, and here's the sell stops coming out. Only four, only four. It's like nothing. So I'm looking at it, and I take a long. And I'm going for this. Okay. I took a long, and you'll see how that worked out. So I got scaled, and now I'm going for this. Okay, and it's just a structured trade. That's all this is. So I see this, I see my absorption, I see my buyers. This is where the trade fails. I get my trade on. I'm going for the overnight high. What I do is, if my stop is here, the distance from entry to stop is my scale. I get my scale, my stop goes under here. And this is just one way to do it. It's not a recommendation. Now, here's what I know. This is too low. I have something called VPOC migration, which is this. So this is too high. Microstructure, which is right there, which I don't know at the time until I see the behavior, the buyer. Now this is too low. That's why that line exists. This now is retail. I have to cross this right here. As soon as I cross it, you could be long here, and maybe you get in here. Your stop is here. So that's the trade. Then my scale is the distance from entry to failure, which is up here. And now I get VPOC migration. Right here, too low, VPOC migration. Looking good, Lewis. Going for target. Break low. Problem. Right here, I need to clear this to go higher. I pull back the VWAP. This is sitting here. This is my obstacle. Let's watch the behavior. VPOC migration. Too high. So now this is my support. This is my resistance. I'm going to put it back up here. And what I'm doing is I'm attempting, underline, to stay in alignment and narrate the market. So right here, it's too high. And I don't know it's too high until this drops down. And then I have to get above it and above this to go to target. And it doesn't do it. So it breaks here. This migrates down. As soon as we come over here, I blast out of the trade. So I just blew out of it because this, for me, is potential shorts now. So I don't have a short here. I was not able to take a short here. However, let's watch. What do I know? Too high? What do I know over here? Let's label it. Too high. And why do I know it's too high? I'm not getting above them. And the way and this is the auction. And what the auction is about is a price. It's a pricing structure. That's all the auction is. It's pricing. What is this worth? Well, high volume is like a retail price in the store. You go to store, you pay $1 for whatever the product is. Buyers and sellers agree. Well, in our business, this is dynamic. So the buyers and sellers, or the shoppers, if you will, for S&Ps, go, well, this is too high. Well, down here in the micro is too low. Well, what about this one? That's too low. How about over here? Too low. How about up here? No, too high. Well, this was too low. This is too high. Now the volume drops down. That's too high. What is this? If I get above it, it's too low. If I break below it, it's too high. See how this might work? Then what do? You blast out of your long, if that's your plan. Now what? Now we break down again and we test. What is it? What do I know? No indicators. Too high, too high. This was too low. Remember? Right here's a bounce, and it's like, break low, pull back short, because this is the opening swing low. We're going to potentially take it out. So for me, this is a short, or if I'm asleep at the switch, It could be a short here. It's all up to your plan. And pull back to this. So let's come back. I'm going to take you now into microstructure. I hope you get something out of this. Please post your questions. Remember, this is the basis for a long. This little volume in here was the basis for getting long. That meant that the sellers were absorbed and the buyers took over. That's what created the long. Now, if we think of this kind of from another angle, when it's like support and resistance, but it's volume based. So this is support. This is resistance. Now let's look at order flow. There's some hints going on here. Market is coming up. I'm seeing selling icebergs. Now the fact I'm seeing the icebergs, of course, is something I pay attention to. I mean, this is why I have an order flow tool. But I don't know, of course, because we could see icebergs selling in the market. The buyers are going to consume the icebergs. Up here, I see a buyer and I see the absorption. This is the absorption detector in Bookmap. I find it's very useful. And what it does for me is, I mean, there's absorption going on here too. I can see that with, this is the stop and iceberg detector, but I see it here. So what that is saying is I've got buy stops and initiators. That's what creates the green bubble. That's delta. In other words, aggressors are delta and stops become market orders. So they are measured as part of delta. But I see absorption and there's my iceberg. I go, okay, now what? Rotate. I have my buyers here going to the moon, Alice, but I got my absorption there. So that means there was a seller and the buyers ran out of gas. We counter rotated. The buyers come back. Now, why is this buyer not going higher? It's because, and we don't know this at the time, it's because the sellers that were here are absorbing the buyers here. And there's the iceberg. So and my VPOC moves up. It's showing me the volume here. So what I'm seeing is the volume, but it doesn't differentiate at first is the volume buyers or sellers, except because I see the icebergs and I see the volume and I see my volume point of control and I see my absorption. If I don't push through these sellers, then there's trouble. So there's my break. So right here, I have the volume, I have the location, I have the absorption, and there's a trouble. Volume drops down. That is saying now there's more volume here than there was up here. We were absorbed up here. The buyers got absorbed. We broke down. This now has higher volume, and that is suggesting too high. This sets the short up. Now, this is the support. So for me, it's an exit and it's a suspect. Once I'm breaking here, I know I want to short. So I break low. Now, when this happens, I'm not going to FOMO into the thing. I'm going to tell you what I think. I missed it. But what do I know from here? This is where the buyers were activated. I also have a location here. It's a microstructure, but the short for me was in here. And then I'm going, okay, let's look at our targets below. What do I have? I got settlement. I have a naked volume point of control here. So this is a scale. And then I'm holding. And I got the overnight low somewhere here. Yeah. So this. So I have this as a target and I have this as a target. So for me, I went here because it was tested in the ETH. Now this is all, it could have gone to zero. So it's not about that. I trade the target. So long, scale, out, short, scale, trade the targets. And I got out at this. So that was that. Now you can see there's more short. Watch this. See this? So short here. Look where we come back. Here, here, here. VWAP, VPOC migration. This is and it migrates here. This says lower. It's a language, remember, and VWAP mid It's everything but the kitchen sink. And what else is it? It's my location based on the microstructure in alignment. So I don't go into ads or any of that, but let me just give you a sense of this. I'm going for this, right? If it's in your trade plan, this is the same short as this here because the targets are open. So if you had not gotten short here, you have a short here in the Trader Lab. And then you're going for this and this, all up to you. So subject to your trade plan, short, scale, risk neutral. Assuming a 2-lot configuration, that's all I talk about in Trader Lab. Or you missed it, short, scale ahead of this low, going for the target here and wherever. Does that make sense, guys? So that's the sequence. So we had a long, and then it's shorts. Are you guys tracking? And by the way, guys, if you're in YouTube, please give a thumb up down at the bottom. Also, there's a link in the bottom of YouTube if you're interested in the Trader Lab and what we do. What I'm sharing here is can be replicated or at least reverse engineered, and you can determine if these have an edge for you. By the way, we're getting upside targets now, which I'll come to. So this is the shorts, okay? So now my plan for today was the following. Possible long continuation trade to the ETH high, then take out the early buyers, short, responsive selling, profit taking, then possibly after the profit taking, somewhere, wherever that is, and I have levels, which I've identified for you, which are here and here. Subject to that, if I come back around, I can then get long for what's called mean reversion and to come out the top and of the high of the day and continue on our merry way with the trend. So that's the structured trade. But so this trade was over for me over here. And if I had runners, I'd be going lower, but that's not really material. So now we get VPOC. Hold on a second. I got an alert going off here. A target just got hit at 80. Hold on. Okay, sorry about that, guys. So we get VPOC migration. This up here is too high. I'm going to label it variable high volume node. And by the way, that link is in the bottom of YouTube. It'll bring you over to the Bookmap Discord Trader Lab chat. There is no cost to be part of the Trader Lab community. There's 60 PDFs of these structured trades you can download, plus a library of webinars on this process. It is a way to slice and dice the market, not saying it's right for you or anybody. By the way, this is VPOC migration. Now, I already am out of my short in the Trader Lab. This is another potential short. I did not take it, but it is another trade in the Trader Lab. So, too high, VPOC migration. I'm going to label it. Let's look at the behavior. Now, these are structured trades. I don't take all of them. I just follow a plan. If I'm already in trades, and at least for the stream, I do not discuss ads. Occasionally I do. But look, let's look at what happened here. So we know about this. And now this is the new retail price. This is too high. Right here, I retrace, and this is resistance. I break low. I pull back here. This is a potential, right here is a potential short in the Trader Lab if it's in your plan. And here's why. At 9 a.m., we have something called the IB30. And it happens if we take this low out, then we have the possibility to take out the IB60, which is called the IB low. And there's over 90% probability we'll take out either the first hour's high or low. That's called the initial balance. So initial balance, high, low. Now, we still have sellers in here. So let's just look at this, see what it does here. 9 a.m., and I have absorption. So what do we know? Too high, too high. This is resistance. Break low. This is resistance, remember. Over 90% probability, we take this out. And it's set at 9:30. So let's just watch the behavior. Pull back to VWAP, mid. This is called mean reversion. So the way this works is we have our IB stat, or IB30, I should say, which suggests there's a high probability we're going to take this out sometime after 9:30 Central Time. This is statistically based. These are available to you in the Bookmap Discord Trader Lab community. This was too high. If I cross back over, this is now called mean reversion. So let's look at what we have. In the higher time frame, the trend is up. In the short developing time frame, the trend is down. When we rotate across, the structure becomes mean reversion. So I know this is confusing. Higher time frame, trend up. Developing daily time frame down, cross over to developing volume point of control, and you'll notice this after crossing over up here, we have not crossed over it, other than some rotational, we've been going down. We cross over it here, that sets up mean reversion. That's outside in trading. We come to the VWAP in the mid, so right in here, I see micro high volume structure. Let me show it to you. Now here's what's important. What was here? A variable high volume node, high volume. It's too high. I'm going to put a little line here. Well, actually, let me just put it here. I'm going to just show you some stuff, as they say. So this volume here is too high. This is the microstructure here. I come outside. I don't get here, which is resistance. There it is. I come across. Now, I don't know when it's here, what's going on. You know, if I'm managing my trade, I could be taken out of my trade. It really doesn't matter to me. I come up here. What do I see up here? I come to location. I've got the mid. I've got the VWAP. I've got absorption. Does this look familiar? I got my iceberg selling. I got buy stops coming out here. And it is outside. If I'm outside with a statistic that sets up at 9:30, that has over a 90% probability, and since we took out the first half hour's low over here, then it gives me a high probability we're going to take this out. So I'm taking shorts only at this point. I take it out. So the target becomes here and then wherever. And the wherever is, who knows? I don't know. You know, could be down here. Actually, this was the target. And the fact it's a target is not material to me. It's only a level, and I want to be long. So I don't have a long here. I'm managing my trade. Trade management is another issue. You have to design that for yourself. Let me show you, though, structure in the microstructure. I'm going to show you how you can manage this now. Now, I don't know where it's going, so I don't know. I put a trade on, I manage the trade because I'm clueless. So this is too high. We break down. This is the IB, the initial balance. Here's microstructure. Let's put some shape to this thing in the micro. There is too high. Break low. Watch. Microstructure. You see these little nodes sticking out? All I'm doing is basically following the nodes. And I'm doing this because what these are consolidation. So when the market goes chop, 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 there's high volume. Think of this the same as this, but it's in a fractal. So this is in the developing RTH daily time frame. And as we chug along, when we pause, it is a consolidation. Inside of consolidations is volume, right? Chop, chop, chop. What is a consolidation? It is really a kind of a skirmish between the buyers and the sellers. Sellers are up here, buyers are down here. If we break away from it, it is saying, and this is language, that the volume in here might be underlined too high. And I break down. This is resistance. Now I do the same thing here. chop, 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 chop. I can see the node right there. If I break away from it, same thing, too high. It's the same thing that's happening against this, too high, higher time frame. Does that make sense? Is that making sense, guys? Oh, hi, Pamela. Congratulations, and welcome to being a Bookmap subscriber. I think you're going to find order flow quite interesting and quite helpful. How are we doing in YouTube? Everybody tracking? And please give a thumb up. There's a little thumb thing down at the bottom. You're finding this interesting and educational, which is the goal. And also, the other part of this is structured trades. So this trade's going wherever it's going. And as far as I know, and how about this? I know I don't know. So my job's not to predict because I'm not any good at it. And I'll tell you, traders I know are not any good at it either. We don't know what will happen or where, because what causes the market to do what it does is the participants. We don't know where they'll come in. Now, sometimes it's logical where they might come in. We can anticipate behavior. We certainly can't predict it. So this down here, is this too low and we're going to break high? Same as what you saw with these? No, we break low. It's too high. Microstructure, what do? We break low. It's too high. What do we do here? We break low. It's too high. What do we do here? Microstructure. We break low. This is resistance. Let's watch. We break low. This is too high. What do we do here? We break low. Right here. Now we come above it. Warning Will Robinson moment. I'm going to put a line in. Now, what I'm doing is, since I have it, my target is so far below, and I think, remember, my plan doesn't mean anything. It just means I'm trying to think ahead a little bit about how the market works, why it does what it does, and what might happen, and where. Now, I don't have any levels here to work with. I'm under the ETH low, and I'm into yesterday's range. I'm like, what's happening here? I don't know. So I have to trail my stop. So too high, too high. This is maybe too low. I don't know yet. I think this is too high. I get my level here. I break below it. This now is resistance. I break above it. Warning Will Robinson moment. You've heard of Will Robinson, Lost in Space. This becomes support. This is resistance. Let's watch now. Break high. Trade's done. Post. Hasta la vista. Thanks for playing, Tom. We're going to send you a nice little gift basket. Now, I have the IB. Now, there's two possible trades here. One is called the IB continuation trade, which is a retracement back to this area for continuation lower. So that's a short. The other one is, and the trade that I'm looking for and prefer based on my plan, is a long to come back here. It's called mean reversion. Let's see both of them and what they look like. Now, remember what was too high, and that's in alignment with this. I took a short here. Now, I'm conflicted, but I'm following structured trade. So I'm going to tell you what I did here. So right here, covered my short. I came up here. I have resistance here. My buyers were here, and they got absorbed by these sellers. My buyers come back here. I see the absorption. I see a 500 selling iceberg. I'm at a location, and I'm thinking to myself, well, maybe we'll come down and test the low, or maybe take it out. So I take the short against this structure. So I'm leaning on this. Buyers trapped here, buyers trapped there, buyers here, sellers here, selling iceberg, 500. I want you to give it a rationale. I took a short. Now I'm looking for a long. I know. I ask myself the same things. What are you doing? Well, I'm following a structured plan. And my goal is to come down to where the buyers took over here. So I know I got buyers here, and I know this is too low. So I have to be very careful. So let's watch. I took a stop. Okay? So I take my stop, and now I'm going, okay, I got to get long to go back now on my longs for the IB failure, it's called. So here, stop was right here. It's a small stop. Buyers take control. Now let's come back. What do? I test this. What's that? My retail price. I see sellers here. So now I want to do is I got to look for a long. So what do I know? Now what was resistance becomes support, and I have a location. So I'm looking in here, and in here, out in here, anywhere in here for a long. And then if I get long, this is going to be my scale. So let's look at it. So I'm really right here. See it? Right here. Right. And why would I get long here? Because these sellers, these guys, got run over, and there's aggressive buying. So my sellers were here, and I know I have sellers, and they're stuck. If you're short and you get run through, and look at all the selling icebergs, and I rotate, I know that the possibility is now I'm going to test these guys. So this is a long for me. So I didn't get long here. I got long like here. My stop's under here. And now I've got to get scaled, and now it's long, 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 long. And so I'm risk neutral. Now I'm going to show you the next target. Because remember what I was saying. Up, down, take out the longs. Look for a long to come across the range and take out the opening swing high. So that was my trade. And I kind of wish I didn't take the short, but I just followed. So take this out and then hold for the continuation of the trend. So that's that. So now you know. Now let's talk about the trade, the long. Here's how this, and there's another trade here too. I got to show it to you. So for me, I'm coming back across here, and my target was the ETH high. Okay, so that's as far as I got. Then I'm at the top of the stream, so I can't take any more trades. I am going to show you more trades though. Any questions? Kind of maddening, I know. But that's, trading, guys, So what is trading? It's almost like a dance or music or a language. I think, in many ways, it's before the market gets to wherever it's going, you know where it might go, and you know what you will do. Not what you might do, what you will do, subject to what you've defined as a trigger or a setup, or as I call them, structured trades, because my trading, and it's structured because it's the structure of the participant behavior, which is represented by this. I call this is the volume profile, and it's just the chassis. It tells us really, like, this is a consolidation right here. This is an outside edge. So if we come outside, and in this consolidation, which is what creates this thing, in the middle is the mean. The mean is like the fair price. So the way the market works, if it gets too low, it's like a sale in your grocery store. It's not going to stay on sale. The sellers are going to raise the price back to retail. This is the mean. So it's like everybody's willing to do business. If the price gets too high, the volume dries up. I'm not paying that. And then if the sellers want to sell their tuna, they got to lower the price to where everybody's willing to do business. So down here, the buyers will come, but they won't leave it on sale, so there's less volume. Up here, the buyers won't pay. So it's kind of this kind of a thing. And then if this price becomes unfair, in other words, the buyers and the sellers go, that's just too expensive. We can leave the whole thing and move to another location. That's kind of how this works. So this is a target. This is a target, and this is where my trade was over. Now I'm going to show you more. So where's the next trade? Well, we have a couple different locations here. The initial balance high sets up, if we come outside, there's outside in trading. So out here possibly can be another long. So let's look at it. This would be where the long is if it comes there. Let's see if it does. I don't know what's going on. Oh, guess not. Where are we? Oh, there we are. My goodness. Well, for me, other than being out over here in my last trade, I've got nothing going on here. Now, I'm going to take you into some microstructure. And this is advanced. Do you guys want me to do that? Get into some micro? Okay, how we doing in YouTube, guys? Now this is structured trading. This is Trader Lab. What the Trader Lab is really it's about market mechanics, structured trades, vetting, understanding where you have a statistical edge. There's no holy grail. Everybody takes stops. Everybody has losing days, and everybody, if they have hopefully loss limits, will hit them. This is the real thing. This is just the way it is. I mean, there's no fantasy, unfortunately. I mean, there is fantasy, but retail traders need, I think, a dose of reality. And that is that we all lose, and losing is okay. You know, there was a book written by Tom Hogard, and it's titled The Best Loser Wins. Losing is trade management and account management, really. In other words, if you're not in alignment, either psychologically or your plan and the condition of the market are not in alignment, I think you might not want to keep trading. You would want to have the brake put on to preserve your account and your psychology. We all feel bad emotionally when we take stops or have a losing day. I do. But that has nothing to do with the business. You know, they're like separate elements. How you feel and the business are different. Casinos are in the same business as we are. They're in a random environment. They play structured games, and we play structured trades, if you will. Those trades have a statistical edge, assuming you do the work. The casinos only play games that have a statistical edge. Now, the difference between us and a casino is they keep playing the games, even if somebody walks out with cash. But they also see it like cost of production and overhead. We have a different experience. We see it like we're not getting approval from the market. We're not smart. Our significant others are not going to. We're not going to be able to say how smart we are because we took X amount out of the market today. Whole different thing. Casinos just are in business. We want to emulate casinos because they have a successful business model. Then it's about structured trades. In other words, waiting for your trade, having a vetted location for a trade under a certain condition, and then triggering structures and trade management. There are pieces, and you can basically put these together. And that's why I've shared 60 PDFs in Trader Lab so you can kind of see what this is. And yes, you've got to do the work. And yes, you can find your own groove. There's no way, one way to trade, and the business of trading is not about replicating what anybody does because it doesn't work. Otherwise, we'd all take that $10,000 weekend seminar and then move the ATM in the basement, right? Well, I think if you've been around for a little while, you know better. So it's called, and if you don't know better, you'll find most likely that after all the aha and exhilaration and excitement that you finally figured out, you really haven't. You really need to be in a different environment and develop your skills, the things that align with you psychologically. So IB, target for me, last trade. Now what? We go into consolidation. So right here, I don't have another way into this. So let's just keep moving along here. So this is too low. Micro high volume structure. I'm going to just start putting these on here. Too high. Too high. Too low. Too high. Resistance. Break. Too low. Too high. I've got nothing going on here. So I have nothing to do here. Let's look. So I don't have a trade here, guys. I'm going to go into the microstructure so we can look at behavior. I'm going to try to put some pieces together for you so you can track. Right here, we have a stop sweep. We had sellers here. The buyers took control. This is a micro high volume structure. I'm going to label it. Coming up, so I've got this. Let's just look a little further down. I got this down here. You can see the high volume node over to the right. This. So high volume, high volume, high volume. Now these are triggers. They're not trades. They're triggers. What this is, if you're in a short time frame and you want to try to sell the high of or something, and the way I think of these, it's not to pick the high. It's rotational trading. But this is what a Trader Lab trigger looks like. And what it is you see the buyers, you see the sellers here, the buyers absorb, and now I run out of buyers. I break. I know if I have this little high volume structure, now the sellers took control. And you notice we had sellers, but nobody really, there was nothing. The rotations were very shallow. I come back here and test, it sets up a short, or, let me give you the or, exit. That's up to you. So, and this is how I use triggering structures. None of these are triggers coming up. They're suspects. So let's come back and look a little further. Where was my buyers? My sellers got absorbed here. My buyers took over. Let's come back some more. Where's my outside edge? It's out here under this swing. So I know I can come here. I can come here. Let's watch the behavior and see if you can see anything happening here. These are not trade recommendations. I'm only sharing microstructure with you. And this is not in and of themselves. Now, these are not structured trades. That is a structured exit. So we want to watch behavior in micro. So I'm going to look over here too, and I know where the volume is. I got volume here, which was created over there. I got volume here. The higher volume is sitting over here, and I can still come out under here. So let's just get back here and try to look at this. This is the last swing, and this is an outside edge. Stops are under the IB, and stops are out here. So let's watch the behavior. And I had the buyers were aggressive here. There's stops here. There's stops here. Now this could be the high of the day. I have no idea. It's not my job. Questions, please post them. In the meantime, I don't have a trade, you see. So this is an area I'll be looking at for structured trades. Scalping wise, I'm not a scalper. I don't believe in it. To me, the dollars are made in the larger ranges. A lot of retail traders think, quote, it's easier if they go for shorter targets. Is it? Well, what do you risk for a shorter target? And over time, when your trades are wrong, you're going to take a stop, right? Well, if my trades don't work, I'm going to take a stop. But when they do work, I get risk neutral. So I'm now scratch and I'm going for the bigger ranges. That's what pays for me, not trying to do this, this to this, I mean, there's just nothing in this for me. So let's watch this behavior. So right here, we want to see the reaction here. Do we just fall through it? Or does this microstructure here become support? We'll just watch. Not a recommendation. We're just going to watch it. These guys were absorbed. We have buyers here. So now the question becomes, right here, is this too low? I have to get above that buyer and stay above these sellers for this thing to go higher. Otherwise, what's happening is these buyers were absorbed by these sellers. And you don't know until hindsight. So, and these are not trades. These are just behaviors, okay? Because this is not a structured trade. There's no structure here. It's just micro. And microstructure in and of itself on its own does not mean anything unless it's in alignment with a structured trade. So let's watch the behavior right here. See if we can read it. Remember, sellers are here, buyers are here. If the buyers are going to take control, they got to get over this guy. He was absorbed. That's what creates this. The sellers down here were absorbed. That's what creates that. You have a fight right here. So if this is going to go up, it has to get over here, and then we're looking at this. That's just structure, okay? Structure. Triggering structures. And these are not trades. These are just behaviors. And part of being able to understand market mechanics is to understand how the market works and to read it. This is where order flow comes in. So I know if I come back here, what happened over here? My buyers took control, remember? So if my buyers came in here and my sellers were absorbed here and here, what do I know? I know that if I get under here, these buyers may show up again. I know the buyers were also active here. So here and here. So if I take these guys out and I stay above here, this might set up a long. Now it's not a long because I don't have a trade here, but I'm just reading it with you. And then this is resistance. Let's see what it does. Not a trade recommendation because I don't have any trades. So, but what I'm trying to do for you here is help you see structure. So remember, the sellers are in control here. The sellers are here. The buyers absorbed here. These buyers need to get up here and then to get back here and challenge these sellers. They are not doing that, which means potentially these guys are safe. And you can see what's going on. So if I'm reading the order flow, I'm looking at what happens based on what happened over here. So I know that if I took a long here, I got to get, I'm trying to get back to this volume. Not able to do it. So not so good. So let's look at a structured trade that might come up here. And this is out here, this area. Now, this is not a trade recommendation. This is the IB. Now, we may have the high of the day in. So this is the IB high. And we have two trades in here. One is the IB continuation. But we have what's called the neutral day. It is possible that we come back inside. And if we do, we come back here. So I have two possibilities. I have a potential long. And I think the better trade, and I don't have an opinion, is a short to there. So we're looking maybe here. So it would be there, there, there. So let's watch this. Not a recommendation. So possibilities are a long or a short. And it's a short from here down. Let's watch it. I know you're saying, well, gee, a long or a short. Depends on the behavior. So right here is a potential short, right in here against this micro volume. Let's watch that. This is where we're trying to go. What this is called is a dual IBF. The long is an IB failure off the bottom, which was a reversal trade you saw me discuss here. And the short is the same trade coming from the other side to come back here. It's called mean reversion. So it's outside in trading back to the mean. So that's the mean. So the idea would be, and if you got short, and the idea of this trade is to come back to the mid, the VWAP, and pick stops. We can anticipate a counter rotation off and off of here because retail traders buy these things automatically, which doesn't mean it's not right. It's just what it is. And then come back to the means. So this actually, if we come back up here, we want to watch this, and it may set up a short to come back through this and get down to the mean. This is the target on the trade, by the way. Sellers. This is another potential short here, not a recommendation. Sellers are in charge right here now. You have two-sided trade. You're going here as the target. You guys have questions? So this is where we're going with this. Okay, this is the target. This is called mean reversion. It's outside in trading. It's the same. This is the same trade from the low, off the low, to get long, to go up, to go north. And now we have the opposite. What you have is the market is liking currently these prices. And we may have found too high. This is potentially the high of the day. I don't know. So we may just stay in here and now rotate. And we have more reports during the rest of the week. But this is the target on this. Now, what I do with this, and this is not a recommendation, if I know, now remember, VWAP in mid. So right here, we can anticipate buyers, depending how far out I come, and we can come all the way out here, wherever, I'm still going to be looking for shorts to come back here. And that's not a trade recommendation. I get, shot like everybody else does and run over. It's just trading. I don't try to make more out of it than that because I can't. But look at the urgency of the selling. Look at this microstructure was too high. I'm looking for shorts, not a recommendation to come down. Let's watch right here. Microstructure right there. We're just going to watch it. We have a little structure here, and we had more structure up here. So this is a potential short developing right here, and it's not a recommendation. I do not call trades. I take stops, and I take them very aggressively. If I put a trade on and I read in the order flow something I don't like, I can put a trade on here and pop right out of it. And I'm only risking a 0.6 ticks. I'm not saying anybody should do that. This is a short that I would be considering right here. So, and it could squeeze. Don't forget there's stops here. So I have to look at ranges of areas to participate in. This is an important area also. So I got that and that. Let's watch. We want to watch these areas. Right here, you got to keep your eyes peeled, as they say. Right here. Let's just watch the behavior and see what it does. We're watching this behavior for continuation short. It's not a recommendation. It could do anything. We're in chop right here now. So what the chop is actually a auction in a consolidation. Here's your high volume structure developing. And I'm only really interested in this right here. So micro high volume there, sellers took over, more volume here in the consolidation. If we can stay below here, then we can go south. So let's see what it does. What I try to do, and I'm not saying this is good, it's just what I do, and everybody has to find how they read the market, is if I'm looking at a change in behavior in the micro, and think of this like fractals or Russian dolls, I'm looking to see are more sellers now going to come in here, or the buyer's going to push these sellers out. And that's really what's going on right here. So we'll watch this. And you can see the structure right there. So this is kind of what I do and what we do in Trader Lab, is try to identify locations and go down in fractals or time frames. And remember, this is another location here that was important. So if we stay under here, then there's the possibility that we're going to go down to that. So that's basically what we're trying to do with this trade. Let's see what it does. And this is not a recommendation. I'm only trying to share ideas here. Sellers are in control here. We rotate it up. If I stay under here, we go down. If I squeeze up, then this trade would be over. That's how complicated this is. This is an important level. So I'm leaning against this, and I'm looking for this. And to me, that's a 10-point trade. And the thing is, for me, the risk on this trade is in here. So 65, 66 and a half, you see. So what is that? Let's assume it's 2 points. Am I okay risking 0.75, let's call it 2 points for this? You see, that's really 12-point trade. Do you risk 2 to make 12? Well, I do, because that's what I want to be going for. I want to be going for this. And I'm willing to take stops, of course, to get that. And if I get it, I do. And if I don't, I don't. That's just life in the fast lane. And these are not trade recommendations. I want to help you guys see kind of a method of process of attempting to translate behavior based on how the market tends to work at times. And anything can happen. We know that, right? So, if this trade fails, it's a tight stop. So let's watch it. So this trade would fail if you were trading here. Okay. That's just the way it is. Now we have this, and these are areas for potential continuation short. So we'll see what it does. Now remember, it's kind of conflicted because the trend is up, but we may have already done our thing. So it's going to be, where's the outside edge? This is it's a hard trade. So let's see what it does. We're in two-sided trade now. I got a question there about the long from the IB low. I think, was that a question? Yeah, that's in the PDFs. Download the PDFs in the Trader Lab. There's 60 of them of these structured trades. Now, what I'm doing here, these are not structured trades. I'm attempting to read the microstructure. The structured trade is going to be potentially up in here, and this not so much. Primarily, it's in here. So we'll see. It can happen sooner, but it's very easy. Like take a short, take a stop. Try to be picking this outside edge. I find mean reversion is not where my edge is, or lower edge, I should say. So it's harder for me. Like, which one of these is the right one? So you got to be patient. Be willing to put the trade back on again if it fits your plan. It's very easy to get caught in this chop because nobody knows where's the outside. Is it there? I mean, really, was it there? Is it here? Where is it? So let's watch this behavior. So I had buyers here. They were absorbed. There's the iceberg. I got buyers here. They were absorbed. I got less buy stops. So this is an area to observe. All these are areas. This is where the structure is up here for potential trade. So we'll see. Now it could reverse anywhere in here. So it's really, this is very tough because you're going for what's down below, don't forget. So as we're pushing higher, it's still setting up a potential to take these guys out, have their stops under here. So I'm looking for shorts here, which may not be, and it's counter trend. Don't forget the higher ticket, which means two-sided trade. So that's a bit, nerve-wracking right here. Whoops, trying to click the mouse. Look at me. So that's a kind of a short. What's going on here? Let's see. I'll take a few sim trades here. These are not trade recommendations. I'm going to see if I can try to read the order flow. And this is not at a location. The location is out here. Okay. So we're going to just try to see if we can do anything here of interest. These are not trade recommendations, guys. I'm still seeing some buyers in here. So you see the buyers. So there's really nothing going on here at the moment. I got to come back here. Now, these are not trade recommendations. It's very easy to get fooled in this. So let's just see if we can see anything of interest. So the area is going to be to observe. It's going to be out in here, potentially, this area for potential structure. And it's not a trade recommendation. I really want to encourage you guys not to trade based on what you see here in the stream. Because it's only maybe. It's not like it's anything more. There's no secret sauce, no magic bullet. Remember, I take stops all the time. More than I would like, but I do, and that's just the way it is. So let's see. The location is somewhat out here. So this looks like it's going to get taken out. think the stop might have been over there. Might have been a better idea. Let's see. One more time. Not a recommendation. I am front running the location, so I am tempting Mother Nature, if you know what I mean. It's very two-sided right here, so we might still squeeze up. So, you know, you just I consider this extremely aggressive. And this should have been one tick above, which it wasn't. So this is where the stop ought to be. So it looks like it's still going to get taken. Let's see what it does. Nope, it's going to get taken. I'll let the stop get taken. This is now coming up to the location. This is the outside edge. So let's just watch right here. See if we can see it. Right at the IB. See if it works. This is now this is the where it should be put on. This is a structured trade. This other stuff was trying to read the microstructure. This is the trade. So this is the one that would be put on if you're looking for mean reversion, called this here. So it's against the IB and this outside edge. So that is the trade, and whatever happens, happens here, right? I guess I should wait for the structured trades. What do you guys think? We're going for this. Now, we might, there's stops under the mid and VWAP, which is important to get these guys out. And this is the mean. So I think, let me just see if I got this at the right place. Okay, that's the trade. So that is the trade. The other ones before that were just trying to scalp. So in the trader lab, this is what's called a structured trade, and it's here, right there. That is the trade. And what it is it's outside in, and the in is back to there. And then it can come out the other side. And if I had more of these on, instead of just running two for you, the next target is here. But we're not going to worry about that. We're just going to try to get here. Anyway, I've lost the chats. They've kind of got disappeared under. I got to try to get them back. Hope you're getting something out of this, guys. Please give a thumb up in YouTube if you're finding this interesting. And if you're interested in Trader Lab and these structured trades, feel free to visit the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. There's no cost to participate. There's 60 PDFs of these trades, the structured trades, the IBF that you're looking at from both sides, both the long and the short, and also a library of webinars so you can kind of see the process over many, many different days and configurations. In other words, the market moves from directional to rotational. And one of the things that's very hard for retail traders is trying to put the market in a box so it's always doing the same thing. Well, the market's not always doing the same thing. It can get directional, and then it can get rotational. Right now, we're in a rotational configuration. So we're going to move this thing down to break even, and we're just going to let it ferment. Yeah, guys have questions, please post them over there. How we doing in YouTube, guys? You have questions? Please post them. Also, please give a thumb up. So what we're looking now is, now we don't know anything. And when I say that, I'm saying genuinely, we cannot know what's going to happen, but we do know what might happen. We might come back here. Now, it doesn't mean that we can't come all the way back up here, take this out, and go and make a new high, right? So if we know that, now our job becomes, if you're in Trader Lab, to know where your trade shows up, which was actually this, and how to manage your trade, which is to get a scale, to get risk neutral. Then you manage your trade. Now, I just put this to break even on the runner. So this way, the worst that happens is, the runner makes a couple dollars, and the first one did its job because I was risk neutral. So once I got my first scale, and you'll notice what happened here, and then bing, back on again. The smart thing that now, how can you tell the difference? That's part of the joy. So I don't get too concerned with that, other than how I feel about it. But the real trade, the structured trade, the Trader Lab trade is this. I mean, if you take it here, you really need to have your stop out here. If you're taking it here, then your stop needs to be out here. So it's the same trade. Now, what we're trying to do is get here. So we'll see what it does, okay? Now let's come back and look at some other structure while we're at this. This is the IB low. If you look at this, let me try to get this so you can see it. The way this works, this is called mean reversion. This is the mean. So what you're trying to do when you do this kind of thing is to come outside to come back in. So it's rotation out, short, into the stops from these guys, right? Oh, the mid and the VWAP. When we see this, that's their buying. They all put their stops under here. Well, that's what this is. 538 stops. So we got those guys. Now, the next piece of this assuming, and this is big, the big thick caveat, maybe that once we get a rotation, do we get more sellers? And that puts this here on the hip parade, or it's going to come all the way back up and take us out over here. So that's what you have to be willing to accept. Or there's more ors. You have a trade management process and you take yourself out subject to your vetted trade plan. This trade could be over right here. Or you're just going to accept that you're going to get to, it's always two-sided. And if we run out of buyers after taking some of these shorts out, then we will get, in other words, the way I kind of think of it is, you got your sellers here. They took out, let's look at this. Let's think about this logically. And that's what the basis of this morning's trade was. The market is long. We come down. Now the market's short. We get our buyers. Now the market's long. Where's our stops? Under here. Now the market is short. Where's our stops? Above here and here and here. If I take this out, then that trade is over. If I only come back here and I get my buyers in here and my sellers are still in control, then I will take these guys out and go here. If I can't get back here, then they're going to squeeze these guys. It's kind of, and this is what rotational trading is, or trading in fractals. It's like you've got buy stops in this leg from the sellers. You've got sell stops in this leg from the buyers. So now we have the sellers are covering. What we need to try to figure out is, and we won't know until we know, are we going to get new sellers here and then take out these buyers? Or are we going to scratch out the runner and that's that and the trade's over? That's what you don't know. So that's where trade management comes in. So let's look at the microstructure. So what we had was outside IB failure. So this is called a dual IB failure. So what it was is down below, inside mean revert, we cut across the top because the trend is up. Then we had the buyers in the leg. We broke down, pulled back. This is the IBF continuation coming back this way. So that's what this trade is. If we don't come back above here, which we can, then there. If we do come back across here, then the trade's over. That's it, So we'll see what this does. We got a couple of minutes, about 8 minutes. But you guys should make a note. The target is about 53.5, 53.25 for the short. Not a recommendation. You guys have questions. And please give a thumb up in YouTube if you're down at the bottom. Also, if you're interested in the Bookmap Discord Trader Lab community, there's no cost for it. There is a link in the bottom of YouTube. You can access the Bookmap Discord server. And there's a lot of additional education available at no cost. Stocks, options, crypto, order flow with a high tier tool like Bookmap. How do you put all these pieces together? They kind of fit inside each other. I kind of think of this as the tip of the spear. In other words, everything I do is built on top of a chassis, which is auction, so auction market theory. The chassis is a volume profile. The locations for the trades are called structured trades, and that's what I share in the Trader Lab. And then the trade is put it on where at your location, get risk neutral, manage your trade, which is either a trade management process or you leave it and it takes you out, and that's the end of the trade, and you go on to the next one. That's as deep as this gets. If this trade gets to its target, this is the target. If it doesn't get there, you get taken out of your runner, and then the trade's over. And right now, I see the buyers are back in here. Remember, the trend is up. So, but that doesn't mean we are trading in multiple time frames here. Higher time frame trend is up. This trade looks like it's going to fail, and scratch the runner, and you still got paid. Oh, it is what it is. Hope you're getting something out of this. This is structured trading. This is Trader Lab. Okay, we're going to watch this location again, not a recommendation. This is our outside edge. This is still a potential area to observe, not a recommendation. Let's watch. These are not trade recommendations. I'm just trying to work this for you so you can get a little sense of it. Structure is here. These guys were absorbed. We come above them, then that trade will not succeed, right? So we'll see what it does. Let's just watch. These are not recommendations. I'm kind of pushing a little bit here because I'm running out of time. I want to just try to see if we can get a rotation out of here. If we can't, it's going to take this out. Any final questions, please post them. I'll try to take a look. It is two-sided right here. And if the sellers are going to take the ball, they need to be doing it pretty quick. There's some sellers. Let's see if we can get some more. Or we're going to squeeze out these guys right here. Still two-sided. These are not trade recommendations. Just trying to push in a bit here because I like to just show you a structure if we can get it. So yeah, our buyers are coming back in here now. You can kind of see the behavior. You would see the buyer. So you had the sell delta. The buyers came up. So far, the buyers are under the sell delta to the left there. You see the green bubble. This. So if we can stay below here, that's good. Otherwise, not so good. Hard to do this. So the stops are going to be sitting here. Outside edges here. I don't think there's going to be anything here to do. It's very easy to get fooled in these. Buyers are still working. This is our outside edge. So this is an area to observe right in here. I'm out of time, guys. Please give a thumb up in YouTube down at the bottom. There's a link down there if you're interested in Trader Lab. The key to this, and I've been trying to show you microstructure, is to have a plan and to engage with tight risk management and following a process. Did I get the trade on? Nope, I didn't, because this. I'll leave you with this. The idea of this here, this should have been executed here actually, is for this. Please give a thumb up in YouTube. Hope you got something from it today. Use the link in the bottom of YouTube. If you're interested in visiting the Trader Lab, there's no cost. You could download 60 PDFs of structured trades. There's only been a couple of them that I showed here in the stream. The rest I was just trying to show microstructure. This is currently a potential short. It's not a trade recommendation. You can keep an eye on it. The goal of this short is to get to the developing volume point of control down around 53-ish. It's not a recommendation, but it would have a nice range to it if it works. If not, like all trades, trade management, job number one, and trying to be in alignment with the context, which is currently mean reversion in an uptrend. So there's conflict subject to the time frame you operate in. So we're going for this is a rotational mean reversion context. Please give a thumb up in YouTube. Visit the Trader Lab. There's no cost, and also a lot of additional education, stocks, options, crypto, order flow, and market maker behavior, algorithmic behavior, and a lot more. Thanks again, guys. This stream will be available in the Bookmap Discord Trader Lab community for those of you who are interested in reviewing it. Thanks so much for visiting the stream today, and I look forward to seeing you guys tomorrow. And trade safe, and always manage your trade and have a vetted trade plan.